Good Friday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitry, or myself are registered investment advisors or broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our Market Chameleon shows, are for informational purposes only. With that, D, good Friday morning.
Good morning, Will. How are you?
Good.
Good morning, everyone. I'm going to share my screen here. And today we're going to continue on our options implied volatility rankings report. Yesterday, we went over the data elements in the table with the different data and analytics. And today, what we'll do is perform a screen to narrow down some of these stocks to a smaller group of stocks based on criteria that we create where we want to develop. So a couple of things here. What we'll do is maybe start going over a question we had. How do I screen for high implied volatility ranking stocks?
Hey, D, will you just walk through how you got to this page?
Yeah. So on this page, if you go under under options main menu and go down to the second item, implied volatility rankings, click on that and you will come to this page.
Perfect.
And so this page organizes, stocks that have options and that we're calculating different implied volatility rankings based on methodologies that we discussed yesterday. So we have the IV30 over here for each of these individual stocks, the change on the day, and then we have these benchmarks to compare that IV30 level, including 20-day historical vol, 1-year historical vol. That's the underlying stock volatility or realized volatility. And then we have rankings, the IV30 percentile rank, and then the IV30 position rank based on the high-low level for the previous 52 weeks. Okay. So what we could do here is say, let's narrow down these group of stocks that have a high implied volatility rank. And we could see that even though you have different implied volatilities for each of these stocks, you can see here 191, 210. Some of these are small price stocks. The question is that a high implied volatility for this particular stock? It is a high implied volatility, but on a relative basis, how high is it? Is it on the low or high end of its own historical range? So I'm going to first sort these by highest market cap. In all these columns, when you click on it, it'll resort the data. So here on the market cap, when I clicked on it, it went from lowest to highest. Let's click on it again. And now we got highest to lowest. And you can see we have NVIDIA, Apple, Microsoft, Amazon, Google. These are the highest market cap stocks. Now, to screen out on a relative basis, we have some of these filters here we could use. These are like kind of quick button filters. And if you go across from left to right, you come up here to IV percentile rank, and you have these percentages here. We discussed this yesterday. This percentage, for example, in NVIDIA, 72% represents that 72% of the historical observations that we have in the last 252 trading days, okay, last year's of trading days, were below this current value, 55.1. Okay, that's what this is. 72% of our historical observations are below. 28% above. So the higher this is, that means that the higher the current implied volatility is relative to its historical observations. Okay. This 52 IV position is saying that if we just took the two data points, the lowest and the highest in the last 52 weeks, it's 42% of the way from the low to the high. Okay. Which, some people by request ask for that. But if you have one big outlier, like one really big high one or one really low one, this will get skewed, right? Because you're ignoring all the other ones, but you have both of these reference points in front of you. So let's take a look at those that seem to be already on the higher end. And we have these two buttons, which will filter out options elevated above 70 percentile rank. So if we click on it, then now we have a list of stocks with the IV percentile rank above 70. So you can see over here, some of them 87%, some 96. So this is a way to narrow down our the potential stocks to analyze. We also, discussed if you wanted to screen out for earnings, upcoming earnings or events, because stocks that have upcoming events will have potentially higher implied volatility to compensate for that, to account for those events. So if you have earnings, like here in NVIDIA, earnings are coming up November 20th after the market close. So knowing that, it shouldn't be that surprising that implied volatility is higher, because there's a reason for it. There's an explanation. November 20th, we have earnings. It's an event that is uncertain. And when that information comes out, people will start repricing the stock based on that new information, and the stock could move at a higher volatility. So given that, it could explain why we're already at this 72 percentile rank. And if we wanted to screen out just for upcoming earnings, we could just say, okay, show me upcoming earnings. And now we could see here that these in the yellow have earnings that are coming up November 20th, November 19th, November 21st. So now we have these stocks in front of us. And if we wanted to analyze them further, we just narrowed it down. What about stocks that just released earnings, but still have implied volatility that are elevated? So their earnings were released. The news is out. You expect maybe implied volatilities now to come back down to its normal range, or maybe even to the low end of the range if people are now selling back out their options, buy writing. The news is out. But let's see if earnings were released over here, and we could see that some of these NVO implied vol is high, but they released earnings November 6th. Here's Alibaba, but that looks like that was just released this morning, so that's in the green. But here's one November 12th, November 14th. So these were already stocks that released earnings. Their IVs are still elevated. Here, November 14th, after market close, we could say that's still has that earnings priced in, because that was released after the market closed yesterday. So that's another way just to screen out some of the candidates. But I'm going to go back to this any, and we could go look for low implied volatilities. Maybe, the strategy is to look for options that may be priced on the low end of its historical range. right? So the option premiums are priced at the low end of their historical range, and we might be looking for opportunities that, from that side of things, right? So we could switch to this subdued IV. And what this does is now narrow down this group of stocks where the IV percentile rank over here is on the low end. Okay. So we see Apple, it's in a 22 percentile rank. Microsoft, 20th percentile rank. Amazon, 20th percentile rank. So those are quick ways that we could just use these filter buttons to narrow down the group of stocks we're looking at. And another uh, data point here could be important to look out for are events that the company has, announced or indicated that aren't earnings, but could still potentially be a catalyst for movement because, sometimes, as you can see here, Microsoft's going to have an annual shareholder meeting, December 10th. There could be a company investor relations meeting, a conference, industry conference. So those also could be important because anything could happen at those events or management could say something, they could release something that new product or something not expected. They could maybe, answer an investor's question or something that may impact the stock price. So it's just important to know that some things might be coming up and you should include that in your overall analysis. So that's this event uh, column over here. Okay. So let's now look at how do we narrow down these stocks further, because we do have these quick filter buttons, so these are things like, well, what if we wanted to see if the implied volatility is up today? Well, we could just click this. So this implied volatility here, the implied volatility next to it is a change. That's how the implied volatility changed from the previous day's close. Okay, so we took a closing observation and implied volatility, and then we track it. How is it doing today? So maybe you're looking for implied volatility that's displaying it's increasing, maybe decreasing. So implied volatility increasing, what is that? Implies that option premiums on a relative basis are going up. Maybe there's buy pressure, decreasing the other way. So let's say we want just the IVs that are up on a day. Click that. And now you can see here, these are implied volatilities that are increasing today. So maybe
Hey, D.
they're reverting back. Yep.
Sorry to interrupt. We have a question from Rob. He's asking, Will, please ask Dimitry if you can sort the data in more than one column. I know you can set criteria above, but can you also sort by clicking on the top of the column?
Well, it'll only sort by the column that you could only sort by one column. But the filters are there to help you narrow those other things down. But if you're this table itself, whatever column you click on, that's the column it will sort by. By default, I think it was sorted by IV 30, the highest to lowest IV 30. But when you sort, whenever you click on this, it'll only sort by that column. But the filters will help you filter out other things like, if you wanted just to see high IV percent, like we just did here, you click on this and then sort. Okay.
Perfect.
That's what the filters, are helpful for. So let's say we wanted to use more filters than we have available here. So we can use these quickly, IV up, subdued IV. We do have market cap here, industry. If we wanted to look at just a particular industry, let's say we wanted biotech stocks. So I could pick biotechnology stocks. So what this is showing me is subdued IV percentile. So these are biotech stocks with implied volatilities that are on the lower end of its historical range, and that the implied volatility is high up today, right? And that it's in the biotech industry. So I could keep filtering these out. And then, maybe there's a filter here that I'm not seeing. Let's say the current option volume. We see 1,600, 2,800, but I don't have a filter here for options volume. But I do have this filter here, stock screener. So the stock screener allows me to go to another screener, our stock screener, create a filtered report, and then save that filtered report, give it a name, and that will appear in this filter here, the stock screener, further basically doubling up my screen, okay, using two separate screeners that will apply to this report. So let's see how that will work, okay? I brought up the stock screener here. So if you go under screeners, stocks, right? Screener stocks, and you will end up on this report, stock screen. And here, I'm going to clear this for a second. And you have all these different filters here. You can see here, got a bunch of different filters, right? In tabs. And then the stock screener itself has a lot more data. So you can see here, I got lots of different data points on the stock screener as I'm tabbing through. But what I'm going to do is go to this volume, price volume and technical, okay? And let's say we want to screen for option volume that is above 10,000. So I'm going to click on this. So right now you can see there are 11,286 items on this data table. I'm going to go options volume above 10,000. Okay, so we've got it down to 391. So you can see like NVIDIA, SQQ, all these have option volume above 10,000. Okay, so sorry, this is the options volume right here, above 10,000. Now, let's say even on a relative basis, we want the option volume to be, above its average daily volume. Sorry, so above 1. There we go. So now we got that the option volume is, so we got it down to 255. That the options volume is above 10,000, and on a relative basis, it's higher than its average by 1. So let's take this simple screen, right? Let's say that's all I want. I'm going to save this here. Let's save this, these two filters, and I'm going to give it a name. So before, right before the show, I gave this a name just to test it. But let's say we say options volume, above 10,000. Okay, that's the name. We hit save preset. Once I saved it, it's gonna show up in here on my save presets. Here it is, options volume above 10,000. Okay. Now that we have it, let's go back to our screener here that we were talking about, options implied volatility rankings. Right. I'm gonna refresh my screen just so it updates to the newest. And let's see under stock screener. See the last one I saved, options volume above 10,000.
Hey,
Right.
D,
So yeah.
Rob, just He's saying is the above by 1.08%.
So if you take the average, it's a ratio. If you take today's volume divided by its average daily volume in the last 90 days, it's a ratio. It's not a percent. So
Thank you.
volume divided by average volume. So let's see. Right now we have, let's see, 1,466 items in here. So let's go to our stock screener and let's say, show me the options volume above 10,000 and my screen, right? Above 10. So now I go down and went down to 255 from 1,466. Okay. Remember, we could sort. We could use any of these to sort. So let's sort it by market cap. I'm going to click on market cap. Right now, it's defaulted by current IV. Let's do market cap. Sorted lowest to highest, then highest to lowest. They're over here. And now we have that filter. And if we wanted to continue using these filters, we could say, okay, let me show me elevated IV above 70 percentile. Show me stock prices up on a day. Further narrowed it down. Show me implied volatility up on a day. So you can see now I keep going. Now I have 22 items. So that's another way of continuing to, and let's say we wanted to narrow this down further. And we're interested in an open interest percentile rank. And what this is looking at the open interest, the most current open interest available in this stock. And then it's comparing it to historical daily open interest in the last 252 days. Similar to what we're doing with the IB rank. And on a relative basis, right? On a relative basis, this is showing how many of the days in the last 252 days was the open interest less than today, less than the most recent. So you can see here, 96% of the days in AMAT were below the current open interest. And this just reported earnings, by the way. So that could explain it, right? You always want to be able to, if you could explain it away, it makes sense. But in any case, what this is allowing us to know is that the current positions, the open interest in the options is high on a relative basis. People have positions, they have, they're committed to their risk exposure in these options. On a relative basis, you could see that 96% of the historical dates were below this. Now, of course, because there's earnings, it could explain it, right? We only have earnings 4 times a year. So that could explain why there's a lot of open interest. People were probably positioning themselves, hedging themselves, expressing their opinion on that, the outcome of the earnings release. Okay, so there's a lot of trading that led to holding on to risk positions. And 36%, for example, here in this iShares EFA ETF, says that even though the implied volatility rankings for this stock looks like it's on a high end, 74 percentile, right? So 74% of the historical dates, implied volatility traded lower. The open interest itself does not look that high. Right? So maybe there's something going on and, it's an ETF. It could be correlated to stuff and things going on, but on a relative basis, right now, there's not a large amount of open interest because, 2/3 of the year, the open interest was above its current level, right? So that's, some more information about given, the state of the market, right? The state of the implied volatilities, the options, the state that, the open interest isn't supporting, that there's like this massive buildup of positions, to raise that implied volatility. The implied volatility might be justified to be there, but it doesn't look like it's being driven by, massive buildup of positions. Okay. On the other hand, like maybe when you get into the 100 percentile rank, 99 percentile rank, that could indicate that, the implied volatilities are elevated, and it could be driven by a buildup of larger or bigger positions that are being held. They're open. That means they didn't those options after they traded, they didn't close out of those positions. They didn't expire yet. They're still open positions. So that I'm going to stop there because we only have like a minute left. But that is an example of just using the filters available, to us on this particular report, and using the stock screener to keep narrowing down the potential items to analyze.
That was awesome, D. What a great tool and a great feature. And thanks for walking us through it.
Yep.
Everyone have a great day and a great weekend. Thanks, D.